and welcome to the latest edition of Geostrategy in Action, a video cast in which we explore how companies around the world are adapting their operations and strategies to key geopolitical developments. So I'm Courtney Rickert McCaffrey, the EY Global Geostrategy Insights Leader. And today we're going to dive into how the private equity sector is managing this current geopolitical environment. So for the regular listeners or watchers of this video cast, you might know this is the third in a series of episodes we're doing in which we're exploring how geopolitics is affecting a particular sector and then how organizations in that sector are adapting. So today I'm really pleased to welcome Pete Whitty, the private equity insights lead at EY, to our Geostrategy in Action episode today to share what he's seeing and hearing in this space. So Pete, I'm really excited to talk with you about the PE sector because PE is in some ways such an interesting microcosm of the broader global economy. So to kick us off, could you just share a little bit of what you've been seeing in the private equity market? How have geopolitics and geopolitical trends really been shaping the way these companies have been working?
Sure. Thanks, Courtney, for having me. Really excited to be on the podcast here. Yeah, it's an interesting time in private equity, right? Because geopolitics, sort of as an issue, has come to the forefront for everybody right now, and that's not something that's always necessarily been the case for a lot of private equity firms, right? Over the last several decades, I think everybody kind of got used to this world as a place where capital could flow freely across borders. It was private equity's job as an allocator of that capital to get it to where it was most needed and to its most productive use, right? And so historically, I think, we think of private equity as an industry that's kind of, came up in, began in the 80s and came up in the 90s, right? That era of globalization really took off in the early 2000s, right? But just generally a time of increasing globalization, right? And it was sort of this ambition that private equity firms in the world at large sort of leaned into, right? And now, of course, over the last few years, that's been starting to unwind a little bit, and we've seen sort of certain catalyzing events over the last several months. And so for private equity firms, that creates an enormous number of challenges, right? Insofar as, you've got a portfolio with, let's call it 30,000 companies spread across the world, valued at about $4 trillion, where the landscape all of a sudden is a lot different from, what it looked like when you acquired these companies, 3, 4, 5 years ago, whatever it was. And so right now, as a private equity firm, you kind of have to triage things a little bit and figure out, A, is my investment thesis still intact for these companies? And B, if it is, what do I have to do now to make sure that this company is still going to be viable over the long term? And so that's where we're seeing a lot of firms focused right now, right? But at the same time, I think that private equity firms, what they do really well is that they monetize both complexity and change, right? And so as both of these things start to increase dramatically, that's starting to kick off a lot of really interesting opportunities for firms. And so I think that's what we're seeing right now with our clients, where they're leaning into a lot of these opportunities that are coming up. So that's kind of the overall view.
Yeah, that's really interesting. And one thing that you didn't mention, but I wanted to ask you about is exits, because that seems like it's a really big topic in PE right now. So can you share a bit about what you're seeing in terms of exit strategies?
Yeah, when we think about the biggest challenge for private equity firms right now, it's far and away the exit situation, right? So when we think about that portfolio of 30,000 companies that are out there, right? About a third of those have been held for, call it longer than 5 or 6 years, right? And in private equity terms, that feels like an eternity, certainly for a lot of the GPs and LPs that are working with these companies. And so, firms right now, they need to get money back to their limited partners, to their investors. And if they don't, right, that whole flywheel of raising capital, going out investing it, right, ultimately exiting the company and realizing a return and then reinvesting that capital back into the asset class in a new fund, that whole flywheel starts to slow down a little bit, in some cases stop. And so, right now, exit readiness is really, really important, right? Now, we generally say that you want to start your exit readiness activities anywhere from, let's say, 18 to 24 months before you actually start to exit the company, right? And that includes, getting your finance function in order, pulling together your equity story, getting the management team ready for all your exit activities, those kinds of things. But especially scenario planning, right? And so generally, there's a strong macro component to that. But as we start to see these geopolitical dynamics, ramp up and become more important for companies, and the operating environment becomes more important, more dynamic, it's important to have a geopolitical overlay to that as well, right? So that buyers, when they come in, you've got the confidence that this company is going to perform in this way under these macroeconomic and these geopolitical scenarios. And so we're seeing a lot more attention and investment there as well.
Yeah, and absolutely. That's certainly something we see across sectors is that attention and focus on scenario planning and really weaving in geopolitical and policy and regulatory developments. That's definitely a trend we've been seeing across a lot of sectors in the past year or two. But I guess maybe bringing it back to PE is, are there any other trends that you've been seeing in how PE firms are specifically handling some of these geopolitical dynamics, beyond that scenario planning aspect that you just talked about?
Yeah, I mean, there's a few, right? So I think, one of the defining characteristics, right, of, let's call it like the modern private equity firm, right, is that they've become highly interventionist, right? Now, that wasn't always the case, right? But certainly that's been the evolution of the industry for the last, 10 to 15 years, right? So firms are working closely with their portfolio companies, not just to set the strategy, but also to implement it, right? And so that includes, identifying and responding to challenges as they come up during the hold period, right? So almost all private equity firms these days have teams of operating partners, right? Whose job it is to work with the management teams, right, across a wide range of issues. So that's pricing, it's digital transformation, it's supply chain, the finance function, HR, IT, product innovation, all of these things, right? And so when the tariffs, for example, were first announced, right, those deal teams and the operating partners, they worked really closely with these management teams in order to figure out, all right, what's going to be the immediate impact on our portfolio companies, right? And they did this across the entire portfolio, right? So let's understand the impact on supply chain. Do we have to think about, changing up our manufacturing footprint? How do we respond to this from a pricing perspective? What's the impact on our margins, right? All these kinds of things, right? Just the things that you're seeing across sectors, right? Portfolio firms are doing this on a holistic basis for their entire portfolio, right? Now, I think a lot of that work has now been done, right? And it's starting to wind down a little bit and move into, let's call it, monitoring mode, right? So where are they focused now? Well, we did a survey, for example, a few weeks back, and we went out to a bunch of general partners, private equity firms, and we said, we asked them, what's sort of your areas of focus right now? 3/4 said that they are more concerned about the second order impacts at this point than they are the immediate impacts across the portfolio, right? And I think, it's because they've got a pretty good handle on, we understand, what's going to happen with our companies, right? But we don't necessarily know, what's going to happen with GDP growth and inflation and interest rates, and especially consumer sentiment, right? Because that has a significant impact on the performance of a lot of these companies. So that's really kind of where the area of focus is right now, is that firms are looking expansively at the overall operating environment.
Yeah, and those second order impacts are so important to understand for so many companies, really across the board. And I think that that's something that we're certainly talking to a lot of clients about is now that we're over sort of that initial phase of the tariffs and the immediate impacts, how do you think sort of medium to long term about how all of this will continue to play out? So, I want to address maybe what seems like it might be a bit of an elephant in the room here. So, all of this that you're talking about, is this just a U.S. issue, or is this really playing out globally as well?
Yeah, it's a great question. I think we're really seeing this play out globally, right? The way the PE industry has evolved, about 40 to 50% of PE is deployed in the US, and about a third is in Europe, and the rest is sort of spread across Asia and the rest of the world. And so, the largest private equity firms, they really are, global enterprises these days, right? At the same time, fundamentally, this is something for which private equity firms don't really have a modern playbook, right? It's interesting, right? You hear that sort of expression where the past doesn't repeat, but it does rhyme. I don't know that that's really the case anymore, right? I mean, we've had the pandemic, right? That was essentially that was a pretty new thing that folks didn't really have experience working with. It's the same thing with tariffs, right? Where investors and management teams are sort of having to develop these playbooks on the fly. And so for PE, what does that playbook look like? Well, I think it's one, developing a house view of where geopolitics is headed, what we think the impact is going to be across a portfolio, right? And it's putting in place a formal process to understand that, right? And I know you work with a lot of companies on doing exactly that. It's leaning in on geopolitical diligence at the deal level, right? So more attention there. It's thinking about the diversification of your portfolio and your relative exposures across geos and sectors, right? So I think just fundamentally, it's going into these situations with the widest aperture you can get, right? And historically, firms have done that at the company level, at the macro level, but not generally geopolitical level. And so they're having to build that into their processes.
Yeah, yeah, absolutely. It's a really succinct way of talking about what PE firms as well as others are trying to grapple with right now. So maybe if we kind of broaden that a bit and look a little more ahead, what do you think PE firms really need to be considering when they're looking at the next 1, 3, 5 years or even longer?
Yeah, I think first is just recognizing that the opportunity set may be changing, right? So you want to think about where capital is going to flow as opposed to where that it's historically gone, right? So a good example here is like we talked about U.S. versus Europe, right? We're now in a situation, for example, where European defense spending, right, as a percentage of GDP is going to go from call it 2 to 3%, right, to 3 to 4%. And so that creates a lot of new opportunities for private equity firms to help build out some of those capabilities, right? Private credit is another good example, right? We've seen tremendous growth in that space in the U.S. Over the last decade, and now we're starting to see similar growth in Europe and Asia. So infrastructure is probably another, right? I know you talk a lot about digital sovereignty, right, and how that's a critical piece of government's agendas. And we've seen tremendous investment from PE firms in helping to build out those capabilities and that infrastructure, investing in data centers and so on, right? So I think that's one, is sort of recognizing how the immediate, midterm opportunities that might be changing, right? And then the other is really around AI, right? I think we're heading into an age where a lot of business models could be fundamentally challenged. And, when you think about what that means for private equity firms, right, having that cohesive and really comprehensive worldview becomes really, really important, right? So you have to have a view of where the world is headed, right? What's that range of scenarios that are possible? How likely is each one? And then what do we have to do under each one of those, right? I think one of the things that we're pretty sure of with respect to AI is that the role of capital becomes elevated, right? And so private equity firms, as allocators of that capital, they're likely to have a really strong role to play in the economy that we're headed toward. But exactly what that's going to look like, we just don't know yet. All right. And so private equity firms, they're going to have to be really flexible here.
Yeah, absolutely. Thanks, Pete. I think maybe the key takeaway I have from all of that is that, the importance of having that house view, not just about sort of the macroeconomic environment and some of the technological change and how that'll drive business growth in the future, but also weaving in the geopolitical element. And that is obviously why we're talking about it today, because it's increasingly important for PE firms as well as others to really have that house view to inform how they're making decisions. So
Absolutely.
yeah, thanks again, Pete, for joining us today. This was fascinating conversation, and thank you all for joining this episode of GeoStrategy in Action. We'll see you again next time.